Yeah, perfect week to talk about OSH. It has been sold off pretty aggressively over the last couple of weeks. So really readdressing our conviction around the story and seeing if anything's changed. The August result was really good relative to the sector and how, given the low oil price environment we had in the half. So there's certainly no concerns there. We also saw the landowner agreement struck between the PNG government and those protesting PNG locals who were affected by the slow land court process, so that they're starting to get immediately paid along with a framework for a permanent agreement to be struck. So that's also ticked off the list. And then finally, checking all of my industry contacts and sources and talking to OSH themselves, certainly nothing negative on the boil at all in the public sphere. So really, with all of that, it starts to look more like the opportunity we had in names like BHP a few months ago, where they were sold off quite sharply and aggressively for no apparent catalyst, and then recovered quite quickly. So we've got the same conviction here in OSH. It has the earnings power of Woodside with an EBITDAX margin of 66%. And even on consensus, not just our EPS forecast, consensus has EPS growth in FY17 of 130% off the floor. So you couple that with the fact that it's got more growth in its portfolio than Woodside, Santos and Origin combined. It starts to look really good with 2 to 3 brownfield LNG trains in the works and going to be brought online that will match PNG LNG, which also has an EBITDAX margin of 77%. So large-scale growth, but not just large-scale growth, but also high-quality earnings additions coming in near-term years. Shorter-term catalysts, looking at the stock, in addition to the oil price, which has been volatile but recovering, you've got Antelope 7. That's part of the Elk Antelope field, which is that development project they've got with Total and Exxon coming into it now. Antelope 7, it's going to test the western extremities of the Antelope resource, and that spuds in October. It could add as much as 1 to 2 TCF of gas, so that's significant because we're already around the 5 TCF resource for Elk Antelope. And if it gets more towards 7 TCF, then you're looking at a 2-train operation or equivalent, as opposed to just one. So it really ratchets up the volume, let alone if they tie it back to PNG LNG. We've also got near-field exploration in PNG called Muruk 1. That's highly prospective. So it looks good on the seismic they've done. That also spuds in Q4, and the company is quite excited about that one. And also recertification of all of OSH's reserves is also going to happen in Q4, which given all the appraisal work they've been doing, is going to see growth across PNG LNG as well as their other projects that they've been exploring. So really, there's nothing that's changed. We've got strong conviction at these levels. The investment committee did add it to our active opportunities list. I just think that with the market jitter or sector jitters we've had in the last few weeks, that's really hurt OSH. Given a few pro-Santos investment banks have been talking it down, in my view. I just think that you couple that with this week's market volatility and you're going to get some great opportunities to add it to the portfolio. So it's still got a lot of conviction around the story. Add recommendation with an $8.92 price target.